Hello, YouTube. Yesterday we talked about doomsday, and it was kind of a joke, but here we are. The market has a pretty big red day. The S&P is down by 1.8%, and the NASDAQ is also down by 1.8%. The VIX is up by 18, and it has a bullish engulfing candle back above the daily. But what's so interesting to me is just that we have this daily bearish engulfing candle, which means that we absorbed or we engulfed the entire range from yesterday. We also closed below our 200 DMA. Those are yellow flags. There will be red flags if tomorrow this weekly bearish engulfing candle, which happened today, also holds, which means if we don't get back above 392.33, we're also going to be back below our 50 weekly for one time. And then next week is when we can confirm that. So there's a lot of emotions right now. And I think that what we're going to try to focus on today is going to be the fact that we have an update to our pattern, which was working and then it didn't. I have a note. I'll circle back and talk about that in a moment. And we're also going to talk about how to get prepared going into tomorrow, which is going to be non-farm payroll. So let's start off here by focusing on the pattern, and then we'll talk about the headlines. And then just make sure you stay tuned all the way till the end of the video if you want to get all the insight, because I think that tomorrow is going to be a do or die. And yes, things change and happen fast. So it might appear like yesterday I'm bullish and today I'm bearish. And that's just because we're following the price. And we have a pattern or a template we like to follow, and it works until it doesn't. The saying is that history does not repeat itself, but it rhymes. And when it rhymes, what it means is that the odds increase, the probability increases, but it's still possible we're wrong. And there's a lot of times when we're going to be on the wrong side of the trade. So we have to make sure we understand what levels are going to break it. So maybe that's a good point for us to start off here. This is the note that I gave to our group this morning. And again, link in the description if you want to find out more. But I basically said that today is the day for us to push off and start advancing. If we're still tracking the yellow box, which I'm going to highlight in a moment, falling below 397.6 is a warning. So now let's go back here. Let's look at the chart. And what we're going to focus on here is going to be the part of the pattern where I think I've highlighted enough, where we stop going down, we come back up, we pop with a flag, we fill the gap, and we try to get back over the 50. So that's the part that I find really interesting here is this current pattern. And what we're currently doing, we have a reversal. We have the reversal, we come down, we fill the gap, and then we start to reverse back up here. So we did that, and then we didn't. So that area that I mentioned, let's now actually do this. Let's actually snap a line on here. Let's use our horizontal ray. Let's use our magnet. And then when we fall below 397.63, let's see what happens. Oh, yeah, that's where the fade started. So after we lost that area, that's where we're now starting to get some damage on the chart. And we know there was a pretty big pivot here. It doesn't really matter what the headline was. Fear was already quite high yesterday at 45, right down to 35. So I think that banks tumble as SVB ignites capitalization fears. So that's the headline. That's what caused it. I don't really think that's the major concern. I think it's more about just sentiment. I think it's more about fear contagion, where if people want a reason to be scared, oh man, there's all these reasons to be scared. There's a plethora of reasons to be scared. So as we're looking at the chart here, like the fade started, and yeah, volume started to ramp up. We closed near the low of the day, and we're hovering. So this is like not looking fantastic. So now let's zoom back out to our one-day chart and just see if we can understand the story here, because I wasn't really looking for a retest of the 200 daily, and we now have one daily candle close below it, and the recent volume is starting to get elevated. So the bears in one day, just like that, they get a whole bunch of evidence to support their case, because as I mentioned before, if tomorrow we do not close green, to keep it really simple, it means we're going to be closing for 2 consecutive daily closes back below the 200 daily, which we've not done since we started this most short-term reversal year to date. So that's going to signal that we're below the short-term price, we're below the long-term price, but more importantly, when we look here to our weekly chart, it means that if we don't close green tomorrow, we're closing with a bearish engulfing weekly candle with one weekly candle close below the 50, and that could lead to a push all the way down to 370. That was the bearish scenario we laid out on our monthly thesis. So like, it's hard to call right now. I wish I could pull out my crystal ball and give you the Justin guarantee on exactly which area we're going to go to tomorrow. Honestly, I just don't know. And I wish I could be more precise than that, but I can exercise a certain degree of confidence. When the pattern breaks, yeah. Then we went to our, let's actually look here at a 15-minute chart with all the lines now. So yesterday we picked up and left off where we were forming a head and shoulders. So head and shoulders, knees and toes. Then we bounce up, dead cat bounce on initial jobless claims this morning, which came in red. So we came in red. Again, red is good for the market. Red comes in, market goes up. And then we just self-fulfilled and started going lower. So all the way up and then boop, boop, boop. So we tried to bounce off our green line, dead cat bounce, couldn't form a 15-minute higher high. Come down, dead cat bounce again, fall below our uptrend. And we also lost our daily downtrend here, which means that if we continue at this rate, we're going to be breaking the pattern. We're going to be closing below the short-term downtrend, which is not something we did last time. Last time we get over it, we don't even test it. We just advance from a higher low and then advance. So here we got low, lower low, lowest low. It's starting to deviate. So as much as this pattern was helpful up to here, what's likely more reliable is going to be looking at the weekly chart. So that's what we're going to focus on here. And I'm going to ask you one time and one time only, if you could please smash a thumbs up and please consider subscribing to the channel if you're enjoying the content. All right, so as we look at our weekly chart here a little bit objectively, there's a lot of lines on the chart. So let's just try to make sure we understand what the stakes are going into tomorrow. And if you're interested, we will have a Friday stream tomorrow where we're going to walk you through the final hour like we do every Friday. And I think it's going to be a spicy one. So come stay tuned. Come tune in tomorrow, sorry. So we rallied up 19.2%. Then we rally up by 20.2%. Okay, so we've had a pretty big push off the low. Lots of area to take profit. What I want to see for confirmation for tomorrow is just that we close red on the day and that we get elevated red volume. That would be pretty bearish for me. Notably, if we can get above last week's volume high for SPY, that's going to be here at 252 million shares. So if we trade more than that, that would tell me that we're decreasing on bearish volume. We're closing at the low of the week. That usually leads to downside. But man, what if we go up tomorrow? We could reverse the entire move. Why? This is where my tinfoil hat was that I thought that into ES rollover, there would be increased volatility. Oh my goodness, was there increased volatility? Expiry is tomorrow. And whoa, did they get to work? Right? Yeah, chart had a dramatic move lower today. So I believe it switches over overnight, which means that we're going to be getting the new forward contract tomorrow. I might be wrong on that. Drop me a comment and correct me if I'm wrong. But what will happen is that the price is going to get artificially high. So when we look here at ES2, which is going to be that next facing contract, let's actually just pull up the contract here to make sure we're not over confusing it. ES2. So we're looking at ESM2 2023. Sorry. So here we pull the next one up. Oh, this one's like priced at 39.55. Yes. So the reason why that matters is because we're going to be getting different numbers for the MAs and also different numbers for the chart here. And I pointed this out to our group today. And after we lost that 39.47 area, that's where the selling started to really cascade. So when I look here at this chart too, there is still this pattern we were looking at. When we were over here, I'm like, well, it's kind of a little bit easier to see the head and shoulders. This pattern has more time on the chart. So this is the first day where we didn't find buyers where we would expect them to because we're hovering, right? We got lower lows, we're hovering, volume is ramping up. This could all just be related to the rollover, or it could not. It could lead to more downside. So all going to be coming down to tomorrow when we have our 8:30 a.m. print. Non-farm payrolls and unemployment are coming out at 8:30 a.m. I believe the expectation is for about 220. I'm not sure what's going to happen. What I thought here, I'll tell you what I think because that's why you guys tune in. I'm not 100% sure. My level of confidence was that we were going to get a move lower today. But here's what I don't like. So I thought we were going to get a big move down, which we did. I thought we would get a big move up. That's what I thought on the weekend. So the part that I'm confident about is that we repeated the pattern that we looked at before. Let's actually go back to SPY now. The part of the pattern I was feeling much more confident about because it was what I was looking for and we got the feedback was this part right here where we have the shooting star. We get that failed weekly breakout, come back down to the 50, bounce right back up. But then I wasn't looking for it to lose again, and it did. So we might ultimately fully reverse it and get like a big suck up where we engulf the entire red bar. I'm just not really confident on that. That's what I thought on the weekend. But again, I'm a human. I have emotions. So as the tape is unfolding and we're fading down, I'm not really feeling as confident anymore because there's a lot of work to do in a single day. And there's no way they cannot not do it. But here, I'm going to zoom out for 1 second. I'm going to show you some of the reasons why I'm a little bit concerned now. Again, keyword being a little bit. Let's look at a 12-month chart. Let's look at SPY. And now we're going to note that SPY is only up by about 2.4% on the year. That's now giving us a massive upper shooting star. So, right, it's an inverted hammer now. QQQ is the one where this is the chart we've been paying close attention to. And the reason why this one here is top of mind for me is because if the trend changes, we have to understand what level that happens at. And for me, when I snap the line here, it's really simple. 29745. Why? Because on a 12-month or annual chart, we didn't quite make it to our high here. That's how we formed that monthly head and shoulders area. So 31469 is the 2020 high. 31368 is our 2023 high. And day to day, things move around. So we didn't actually poke above it. It's within like 10 cents. And now the fact that we are getting that head and shoulders and we now are below the 2021 low, that's the part that concerns me, because the NASDAQ is supposed to be leading. And I'm telling you, I'm concerned, but like, come on, it's up 9.91% so far this year. It's just when the chart stops giving us those continuation patterns, right? The higher highs and higher lows, we have to be receptive to it. So falling below the 29745 or 2021 low is my concern. I want to see that area defended. I want to see it reclaimed, and I want to see us close green tomorrow. Otherwise, I kind of have to default and think that we're at a turning point. And both teams have quite a bit of evidence right now, but we're going to give an edge on a weekly close if we're closing around here. QQQ is still holding up. It's not a bearish engulfing weekly candle yet, but we have to see these bulls show up. So thank you so much for tuning in, and hopefully it is not doomsday. So thank you again for tuning in. I look forward to seeing you tomorrow.